So, Ed, it's often on day two, where we get these think tanks, the IFS, so on, giving their reaction. How interesting has that part of it been today?
Well, so we do have that, and that's always, it's kind of interesting, but the main story right now, the thing that's just everyone's talking about is what's happening in financial markets. So shall I show you? I mean, that, in a sense, actually, it comes back to the fact that the government is borrowing a lot more this time around. And what we've got here, this is kind of adapted from what we're hearing from the think tanks today. This is how much Jeremy Hunt wanted to borrow in the next few years. So quite a lot of money, £300 billion. But just look at how much bigger the amount is under Rachel Reeves. So she is basically proposing to borrow an extra £142 billion compared with what Jeremy Hunt was planning. So the markets, which is, they need to absorb that money. I mean, that's what happens with government borrowing. Someone needs to pay for it. And markets investors are now saying, well, hang on, we're not entirely sure about that. And it's interesting, there's two kind of benchmarks for this, which governments tend to get a bit nervous about. The pound and gilt yields, what's happening with those things. And in both cases, it's not particularly good news. So the pound, that has dropped to... Essentially, it's kind of the biggest two-day fall that we've seen in about 18 months. So it's a genuine fall in the pound. And then gilt yields, which is the one that you don't want to see going higher, that has also gone up. So that's now the highest since last November.
And what about when Liz Truss was Prime Minister? What happened there?
It's a really good question, because, I mean, you'll remember, these are the charts we were looking at during that whole kind of mini-budget aftermath. And obviously, gilt yields went a lot higher then. This time around... This is kind of showing you the same thing. So just in the last few days, how much of those gilt yields crept up by. And they have gone up. But compared with the post-mini-budget period, that was the mini-budget. So same statistic, gilt yields, 10-year, that went up far more.
So it's very different.
So it's very, very different. This is not a mini-budget moment. But that's unusual. You don't normally see as much of an increase in that, and you don't see the pound go down as much after budgets. So it's definitely a concern. And I think it's a concern not so much because they're worried about a crisis. It doesn't feel like a crisis moment, but it does feel like something that has a bearing on how much the government can spend, because right now, your ability to borrow all that money I was showing you about a moment ago, that kind of depends on, what's the interest rate that people are charging you on it. And the OBR, the Office of Budget Responsibility, they kind of did their forecast of what they thought would happen to these government interest rates, gilt yields. And they said, you've got a bit of leeway. So if those rates get up to that red line, then you're going to potentially break your fiscal rules. And where we are right now is there. So already, we're kind of more than halfway towards the danger zone. And that, when you hit that danger zone, then Rachel Reeves has to start thinking again about whether she can actually spend all that money. So it's a really big deal.
And what have the IFS said?
Yeah, so that's kind of what's going on in markets. We had the whole... I mean, there was a lot of stuff today in terms of, what does this mean for public spending, for instance? So this is showing you, and this is actually Resolution Foundation, showing you how much extra spending there has been at every budget going back to the 2010s. And what was interesting about this, look at the red bar there. That's this budget showing you it's a really big increase in spending. So all that borrowing is going towards a lot of extra current spending. But what's interesting about this? So if we kind of break down that red bar by year, have a look at this, OK? So taking all the spending and working out where it's going in each year and just how much that's actually been increased, it's really striking how much of that comes in the next few years. And then when you're looking out towards the end of the decade, it's not very big increases in spending there. So the IFS, which was looking at this, was saying, well, hang on, it's generous there, but they're just carrying on doing the same thing that previous governments were doing and saying we're not going to kind of spend all that much in the future. Can I give you one more chart while we have a moment, which is the one that the IFS always kind of goes on about is what's the distributional analysis? What does this mean for the richest and the poorest in the economy? And this is kind of interesting because when the Treasury did their budget, they were talking, when they announced the initial budget, they made a big show of the fact, and what this is showing, it's called a distribution analysis, and anything above the line means people are getting better off. And this is from the least well-off through to the most well-off. And the Treasury kind of like to make the point that people were getting better off as a result of this budget, pretty much across the line. But the problem was that wasn't taking account of the increase in national insurance. So when you take account of the increase in national insurance, actually everyone is a bit worse off because they're having to pay more. So there's kind of two sides to this. More money going into public services, but a lot more in the way of taxes that are being charged to people around the economy.
Right, Ed Conway, a lot to get through there. Thank you so much.